Ladies and gentlemen, good day and welcome to the Q2 FY24 results conference call of Senco Gold Limited, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Devanshu Bansal from Emkay Global Financial Services. Thank you, and over to you.
Yes, hi. Good morning, everyone. I would like to welcome the management team of Senco Gold and thank them for giving us this opportunity to host their Q2 earnings call on this auspicious day of Dhanteras. We have with us today Mr. Suvankar Singh, Managing Director and Chief Executive Officer, and Mr. Sanjay Banka, Chief Financial Officer. Sir, festive greetings and congratulations on a good execution in Q2. Over to you now for your opening remarks. Thank you.
Hi, good morning everyone. Happy Dhanteras and happy Diwali in advance to everyone, all of you. Thank you for joining. So, when we begin the Q2 earnings call, before that I would just like to set the perspective in terms of the global markets and the outlook as we see the trends in the overall market. If we look at the growth of jewelry industry, especially gold, for the first half of the year and especially the Q2, we have seen that the India jewelry demand overall has grown by 7% as per the data that we see from World Gold Council. And if we look at the last 5 years CAGR average, it is 19% above the last 5 years average trend that we see. So therefore, from the perspective of demand from the consumer, we can see that there has been an overall interest and increase in terms of demand from the consumer. That is one part of it. The second part of it is that if we look at the diamond jewelry industry per se, we have seen in the last 2-3 months there have been a lot of news in terms of the prices of diamonds that have been having a downward pressure. And if we go deeper into the details, it is especially the bigger size diamonds that have been under pressure. The smaller size diamonds have not been under that much of a pressure, and this reason being the slowdown that we've seen in the US markets and the Western markets, the recession situation that we see in the Western world, and that has been the reason for this, the price being downward. But that becomes an opportunity for the Indian jewelry industry. We have seen robust demand from the Indian consumers, and whatever the price benefits that we as the industry can gather during this time, through offers and schemes, we are being able to give a better benefit to the consumer and pass on that benefit to the consumer to a certain extent. So this is how we are seeing that overall market scenario. But if we go deeper into it and if we analyze, today being Dhanteras, we've seen a large amount of footfalls happening at all the stores. And just the way we have seen in the first half of the year, there have been a decent growth in terms of demand of diamond jewelry, which is supported by the 14 karat, 18 karat gold, the caratage that is being used for diamond jewelry, because the reason being that within the budget, the consumer can get their demand fulfilled. The designs are more trendy and Western, and overall that is going to help in the usage of the consumer. And as far as the company is concerned, it overall adds to the bottom line as well. So this is a good, decent positive situation that we see here. And in terms of the growth of diamond jewelry, we have again continued to see more than 30% in terms of volume and close to 50% in terms of value for Q2 as well. When it comes to the rural demand, so last financial year we have seen that overall the stores, the company-owned, company-operated stores were growing at a much higher level compared to the franchisees which are in the tier 2, 3, 4 cities of the country for us. But this year we have seen that while the company-owned, company-operated stores have grown at around 30% our franchisees have grown at around 15%. So that is a good situation to be in, where we are seeing that while the company and company operated stores have grown at about 22% for like-to-like, and with the new additions, almost 28%, our franchises have grown at 15%. So that is a positive sign for the overall market. As far as the geopolitical situation that we see, which is impacting the gold prices, we were analyzing that this year the gold price is approximately around 60,000 rupees currently. Last year during Dhanteras, the prices were about 50,000 rupees. So we are seeing almost a 15 to 18% growth in terms of price and value. So while in this season, if we look at the volume growth, we do not see much of volume growth happening. It will be maybe in single digits, but in terms of value growth together, we might get in the range of 18 to 20%, in terms of the overall growth. So this is how we are looking at the overall industry. Now coming to Senco Gold and Diamonds, we have seen that overall we have added 9 stores. 6 stores we had added in Q1, 3 stores we've added in Q2. But also to add to this current data, we would like to say that in the month of October, and as we speak to you today, we have added 8 more stores. So we have crossed the milestone number of 150 stores for Senco Gold and Diamonds, and currently we stand at 153 stores. So in the coming months, we would like to add around 8 to 10 more stores, and that way we will be adding about 25 to 26 stores for this financial year. In terms of overall revenue growth, for Q2 versus the previous year Q2, we've grown by 26%. And if we look at the H1 versus the previous year H1, we've grown by 28%. And if we look at the PAT, overall in terms of growth, we have seen almost a 30% plus, almost a 36%. 30% quarter. 30% quarter. So that is how we've seen the growth in terms of PAT. So yes, the base has been low. We have always seen in the past trends that Q2 has been a comparatively slow quarter. We do not have too many festivities. We have Adhik Maas in this particular season, and it is a preparation and a build-up to the festivities and the quarter 3 that we see with the Durga Puja, with Dhanteras, Diwali, and the weddings that are happening. And one thing to keep in mind is that it has been said by CAIT that in the coming 1 month we have 35 lakh weddings, and that is a very large number, and almost a 4.5 lakh crore is the spends that are going to happen, and jewelry industry usually gets a share of 10 to 15% in terms of the overall spend. So therefore, even at what we see the consumers buying here, we've seen that a lot of wedding jewelry is getting sold. That is almost 40 to 50% of the share of whatever jewelry is getting sold. And in terms of the daily wear, lightweight jewelry that is getting sold, the people who are saving the money to have some amount of buying during this auspicious season, that is about the remaining 40 to 50%. Interestingly, out of that we have seen that the 10% or to 15% is the kind of growth we have seen for men's jewelry. So the heavy chain. So whatever we see in the movies right now with our sports people wearing chains and bracelets, and our heroes wearing chains and bracelets, there is that inherent growth in demand of men's jewelry that has seen a substantial growth. So with this, I would like Mr. Banka to get into the further details of the numbers.
Yeah, thank you, sir. So while sir has briefed about the growth in the business and the revenue, broadly we have ensured that there is a proper capital allocation to the various zones as we divide India. We have grown across all the zones in terms of revenue and volume. In fact, we must say that as far as the East region is concerned, East region continues to grow. So while we are talking about a 23% YOY growth in H1 for own stores, so the East stores have grown by 27%. West Bengal has grown by 27%. North has grown by 26%. South has grown by 31%. And West has grown by 43%. So the future growth story remains intact, primarily because as the base is low. So when we talk about the per store sale, while the blended per store sale is 33 crore per store per annum, our own store is 37 crore. So there is huge potential still for stores across all the India. Our borrowing cost remains range bound while despite a 450 basis point increase in the Fed rate and similarly around the 200 basis point increase in the MCLR, there was no substantial impact in our borrowing cost. The impact has been 15 to 16 basis points, and the blended ROI is in the range of 6.15%. That's 0.1. Post the IPO, our debt equity ratio had improved and it had become below 1. So 0.82 is what was the debt equity ratio. But as we had said earlier, that the funds which we are raising is for the long-term capital and borrowing. So we have invested the entire funds raised out of IPO in the working capital. So with 17 stores which have come up, we have deployed our inventory. Similarly, for our existing stores also, we have increased the inventory level further. Since we are focusing on the diamond sale, diamond inventory is also increasing. So overall, we are very confident that we will continue to expand at the desired pace and work for shareholder wealth creation. Thank you.
Just to add to what Mr. Banka said, from other aspects of the business, we stand to be certified for Great Place to Work. So our team is highly motivated and working really hard to achieve all the numbers. And we are, from the management, doing the necessary support for their growth. Also, from a technology perspective, in this Q2, we launched the Senco Metaverse. We call the SencoWorld.com. It's a pilot project and the version 1 that has been launched, in which, through gamification, we would like to showcase our products, our jewelry, our various campaigns, and people can visit and have an experience. And with the more evolution, we will continue to invest so that we can give customers a much more immersive experience. So that is the kind of technological futuristic investment. Our websites continue to get updated with the latest designs, and what we see is that customers are looking at the various websites and the product catalogs and then visiting the stores with the demand of buying that kind of jewelry. So the omni-channel strategy and the websites are acting as a tool of marketing to reach out to the customers and inform about the various designs. In terms of the offers, in the Q2, while it's been a milestone quarter, especially a memorable one for Senco Gold and Diamond, because we got listed in the month of July, and then till August we had the Independence Day celebration, and we had various anniversaries at the stores to celebrate their 1 year or 2 years or 5 years or 10 years, and we kept inviting customers. So therefore, we kept coming up with new collections under Everlight or under Vivaha for the coming season. So we kept introducing new designs, and I think that this Dhanteras, along with the attractive schemes and offers that we giving to our customers, we are getting new designs, new concepts, and working hard to give the best of services to our customers and make them happy. Thank you very much.
Thank you, sir. Should we open the floor for the Q&A session, sir, now?
Yes, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star followed by 1 to ask questions. We'll take the first question from the line of Vidisha Sheth from Ambit Capital. Please go ahead.
Yes, hi. Thank you for the opportunity. So a couple of questions from my side. Number one, given the 28% YY growth that we've seen in the first half, and with the shift in festive to the second half, as well as the overall category tailwinds and higher store additions, how would you look at your growth versus the earlier guidance of 20% for FY24, as well as growth over the medium term? That would be my first question.
We will continue to guide to our investors that, our last 3 years, 5 years CAGR growth has been in the range of 18 to 20%. And going forward, though we see a great potential and we'll keep working harder, but our growth expectation will be in the range of 8%.
But sir, just to follow up on that, if we've already recorded 28% in the first half itself, wouldn't the overall growth for FY24 be on a bit higher side?
See, the thing is that the base for quarter 3 is much higher compared to what we have seen in the H1. So logically, we can always say that yes, we will continue to grow in the same rate. And internally, we might put our best efforts. But as far as the guidance is concerned, we believe in having a more conservative approach and rather perform better than the kind of conservative estimates that we are giving to you. So this is my guidance to you. We will again come back after quarter 3, and that is the most critical quarter. And then again, we can review and give you a further guidance.
So just to add on it, while during the roadshows also we talked about 18 to 20% growth. But if you look at the growth in quarter 1, which was 29%, and quarter 2, 26%, for H1, 28%. So internally, we'll strive to work more, but our guidance continues to be 18 to 20% YOY growth for a full year.
Sure. Coming to the second question, when we look at the implied gross margin for the second half of FY23, that comes to nearly 19%, which seems a bit on the higher side. So just wanted to clarify, was there any one-off in the second half, and what would be the outlook for FY24?
No, Vinisha, this is the quality of the revenue, and that is a trend for the first few years. So even in 21, 22, and 22, 23, the gross margin and PAT were subdued. This is the structure of the industry. Last year, if you remember, our PAT in H1 was around 40 crores, 39 crores to be precise. So 30 crores to be precise. So which was the result of the lower gross margin percentage. So the major part of the gross margin and the PAT comes. So the 19% which we are saying is not any one-off. The possibility of one-off is not there, because as we have said that we continue to hedge properly and above 80%. So if at all there is an increase in the gold price leading to any gain on the inventory, that will be reduced and mitigated by a loss in the hedging. So since we are having a proper hedging strategy, we will neither gain on account of gold price increase nor lose. There may be minor impact due to accounting, 4 or 5 crores here or there. That's all. But there is no substantial one-time impact due to gold price rise or fall in our financials.
Also, to add to this, if we look at the consumption behavior, we have the wedding season and also various weddings that have happened in the past. So consumers buy jewelry for their anniversaries. And also in January, February, we have the Valentine's Day. So what we have seen is that the diamond jewelry sales for the H2 kind of is on the higher side compared to H1. And overall, the cost remains the same, but the sales and turnover increases in H2 compared to H1. And that is where we have always seen that in H2, the gross margins are comparatively higher compared to H1.
And again, just a follow-up to that, so given that Senco as a brand is getting more competitive in terms of its pricing, what would be a fair outlook for the second half of the year in terms of gross margin?
See, as you said, we have seen as the gross margin of the competitor, and we have also heard that the gross margin that will be depending upon the franchisee addition. So we look at during the roadshow also we have said that the full year gross margin will be slightly lesser, 14.5% to 15%. So slightly 80 to 120 basis points lower than last year, because last year diamond price increase had led to slightly higher margin. That's point one. Now vis-a-vis competitors, so we definitely are working in a competitive market, but the leadership implies that despite the competition, you adopt your own strategy, and that you have seen that despite the competitive pressure, we are number 2 in terms of return on equity. So we will continue to develop our own strategy while working in a competitive market by increasing our relationship with the customer, the sort of engagement, the BPL activity, the SES legacy, the design leadership, Bengal Karigari. That will help us to mitigate any competitive pressure. So net for the whole year, we are looking at 14.5 to 15% full year gross margin, while H2 gross margin has to be around 18 to 19% to give that blended gross margin.
Thank you. And just the last question from my side. While on overall store addition side, we seem to be ahead of guidance of around 18 to 20 stores. But when we look at store addition in 1H, we have just added one franchisee store. So for FY24, can you give a ballpark number as to how many stores will be under the COCO versus franchisee model? That's all from my side.
Yeah, H1 we have added 3 franchisee stores. One is Ara, one is Bhagalpur, right, and one more. So as we talk to you today, we have added 4 franchisee stores, Ara, Bhagalpur, Dumka. It is a part of our going deep strategy. And now that we have got a substantial presence in Bihar, and as Bihar, so we already have a substantial franchisee presence in Odisha. We are now going deep in Bihar. We have Bihar, Ara, Bhagalpur, and Dumka. We have recently opened 1 store in Santipur. So we have a good pipeline. 3 to 4 more franchisees are likely to close by March 24. So 17 stores we already have as of today. So we are 153 stores as of today, and 8 to 10 more stores are likely to open, which we will be ahead of our guidance of 25 to 28, or be in the same range.
Divisha, does it answer your question?
Yes, thank you. That's all from my side.
Thank you. The next question is from the line of Vishal Gutka from Phillip Capital. Please go ahead.
Yeah, hi team. Congrats on a good set of numbers. I have 3 questions basically. First thing is that during the quarter you have converted one of the franchisee store into the company-owned store. Just wanted to know the reason behind it, or what is the reason behind it that the conversion that has led to the conversion. Second question is on the franchisee. So most of the franchisees for you are based out of tier 2 cities. I believe that the reason is that franchisees are able to do good business in smaller cities due to lesser competition, and secondly, they themselves are good connect. So if you can elaborate more light, what is the reason that most of the franchisees are based out of smaller cities? And third is that the third question on that uptick in studded share. We have seen a decent uptick in studded share, but the gross margins more or less have remained flat. Probable reason could be fall in the diamond prices. That could be one of the problems. But on the other hand, we are also at a decent increase in the gold price because the entire inventory is not hedged for you. Some extent is open. Just if you can just enlighten us, this is the question on the answer on these 3 questions. Thank you.
Right. So the franchisee that got converted into own store is in Jajpur, Orissa, and unfortunately, what had happened in the month of June, and then later on, we had 2 more franchisees. They had suffered burglary. So this Jajpur store had to suffer a loss due to burglary, and since they lost a lot of their inventory, but we did not want to lose the market share and the goodwill of the brand. So we decided that the franchisee will now be converted into a landlord kind of a situation, and we will keep our stock and run the store. So that was the reason that Jajpur got converted from a franchisee to an own store.
Yeah. So most of the franchisees don't take the insurance cover for this?
No, they get.
Is it not covered?
But insurance companies take a lot of time for processing. There are reports, there are FIRs, there are follow-ups, there are surveyors. It takes a lot of time for the insurance companies to provide the money back. So like say for example, the franchisee had an inventory of say approximately 9 crores. 2 crores was the amount that the insurance company gave to them right away, but the rest of the negotiation, dealing, surveying, discussions are continuously on. So while insurance is there, but the situation is never a very easy one to handle and get sorted. So this is how it is.
So we are working on that. We are working on that. We are working to have a, if possible, as per the IRDA regulation, some sort of group insurance policy where all the franchisees gave the same terms and same offer, and it's possible to get a higher interim claim. These are the innovations which will take time, but we are working on it, and it will not only benefit Senco, it will benefit the entire jewelry industry as well.
Got it. And what was the quantum of burglary? Any quantum of inventory that got stolen off, or what was the amount? Because 2 crore they got from insurance company. Any amount that you can quantify?
The amount was approximately, we don't have the exact figure right now, but around 8 to 9 crores. That is what we can, guide you for the Rajpur store.
Got it.
And to answer the other question, was the tier 2, 3, 4 city. So what was that thing on tier 2, 3, 4? The relationship that they build with the local customers.
Yeah. So my question was that why most of the franchises are based out of the smaller cities. One reason could be lesser competition, so that they earn good. They do good business. Second thing is that they themselves might have good connect within those areas. So if you can just enlighten, throw more light on this, what is the basic reason behind it that most of the franchises are based out of the smaller cities?
Yeah, so therefore the smaller cities, you need someone, so it's like, in the concept of rural marketing, trust is important. So now while as a brand, there is an overall trust that we are building through the processes, through the branding, the local face connect is very critical. And that is where, a local partner who behaves like the face of Senco, along with the brand supporting him from the back, and the BTL activity, driving at the local aspect, fulfilling the local sentimental demands. So that is why getting a good franchisee for the tier 2, 3, 4 cities is the great opportunity and the best of strategies that one can follow. So this is how it is. And the span of control also, like say for a small tier 3, 4 city, you have to get quality, employers and managers to drive the store. So when there is a sense of entrepreneurship from the franchisee, his contribution becomes critical along with the manpower that we are having in those tier 3, 4 cities. So this is how we look at the overall strategy.
Got it. One more question was from my side that whether franchisee operations are viable in metro cities as well, given the gross margin profile that we have.
So currently, we have to be very strategic in the thought process that franchisee operations, the investment for the franchisee in a metro city has to be much higher. So that is the first point to note of. And secondly, mentally the franchisee needs to believe and be there for the long run. So it is not going to be a 1 year, 2 year story. He has to see that in 3 to 5 years, he will get his returns and, the break-evens and all of that will happen being a franchisee. So that is where the bigger metro city franchisee stories should be the second priority. Focusing on tier 2, 3, 4 is the first priority.
Got it. And the last
question. To answer your question on the gross margin with the diamond jewelry sales going up. So there are 2, 3, areas where the gross margin impacts happen. One is that what is the share of own store versus franchisee. Then we are seeing a growth in the diamond sales, and the growth in the gold sales is comparatively lower. We are about 80 to 85% hedged. So therefore, if there is an increase in the gold prices, but 80-85% of it is already covered. So you are only left with 10-15% of the inventory to enjoy any benefit. But that also is a very marginal thing, and hedging accounting is a different concept to the hedging aspect. So there is a little bit of complexity involved and doesn't directly flow into the account. So there are so many aspects of it. And lastly, that Q2 this time has been a special Q2 with the IPO coming in, with the overall excitement, and we are building up positively for a great Q3. So therefore, we did not much cut down on the expenses, and we've seen what we have seen. But we are confident that our Q3 will be much better, and we will be able to recover whatever we have invested in Q2 and what we'll invest in Q3.
Got it. Thank you so much for answering the question patiently, and wishing the team happy Diwali and all the best for the season ahead.
Thank you, and same to you.
Yeah.
Thank you. The next question is from the line of Nitin Goshar from BOI Mutual Fund. Please go ahead.
Hi, good morning. It's a couple of questions. One, wanted to understand the buying pattern of our target audience. how sensitive it is to the price points that we try and cater to.
Yeah, hi Nitin, good morning. So buying pattern very clearly, while the prices, as you said at the starting, while the prices have been high in Q1 and as well as Q2, it only fell in the month of June and September. Despite high prices, the interest has not come down. And we said globally, in India, the demand is overall higher by 7% and 19% higher than 5-year average. Till today, in the 6 months, or as per World Gold Council, in the 9-month period, India has already sold 363 tons, and full year target is 500 tons. So we see a continued demand, and that is getting reflected in our sales. That it has grown 29% in Q1 and 26-27% in Q2, with an average H1 of 28%. So the customer is, with the price increase, then the customer gets a FOMO effect. Because if you look at long term, if you look at the research agency, the de-dollarization which we are talking about, the weakening renminbi, the central banks are continuing to buy gold, and the gold production is not increasing substantially. So we are hopeful that the gold price will continue to move northward and the consumer demand will not come down. So at least the organized sector, as you've seen the results declared by other companies, all are growing by minimum 20%. So that is the same range we are confident for the future growth.
Got it.
Added to this, when we are talking about diamond, the stud ratio as a future growth strategy, which currently blended is around 11.8%, and we are looking at a 15% target in the next 3 to 4 years. And we have said that our stud jewelry percentage in our own store, which has increased to 13.9%. We informed that in North market it is 19%. So the diamond growth also says this idea of shifting pattern, and as we are entering into new market, that will further add to our top line and as well as the quality of the gross margin and EBITDA.
Got it. And how should we track your organization? Should we track the volume growth as an ideal factor, or should we track the value growth as an ideal factor, just to understand the underlying demand factor from the consumer? Just the backdrop is that you are catering to a certain price point, which can be at times sensitive if the gold prices shoots up.
So what we have said, so if you look at the other large player, this question has a very classical question. It is not a necessity product that no, you have to consume so much. So we look at even when we do the budgeting, our annual planning or the long range planning, we look at a revenue growth. Now that revenue growth can come either by volume variance or price variance. For example, this 28% growth which we are talking about, part of it around the 13 to 14% has come on account of price increase and balance on account of volume. Volume is gold and diamond both. So in future also, let's say the price increases to 70,000 range or whatever, 75,000 range. It will not reduce the sales. It may impact the volume in short term. So let us look at the revenue growth in price. Volume is just an indicator to understand how the customer pattern is increasing.
And also one more thing to add here. See, we have our one measurement KPI, we say VAVO, value and volume. So we are measuring both of it. Sometimes we have, and historically also we've seen that when gold prices jumped from say 3,000 to 5,000, we saw a hit in volumes. But in terms of value, we continued to grow. And then again, when gold prices came down by say from 5,500 to 4,800, we saw a jump in volume, and the value also continued to grow at a higher rate. So this is how overall you need to judge both. And another aspect of it is that with the increase of sales of diamond jewelry, there is a carrated sold and value sold that we are analyzing. But the gold that we are using in diamond jewelry is usually 14 karat and 18 karat gold. So there, if we convert and normalize each and every purity into 24 karat, then obviously with 14 and 18 karat and we normalize it into 24 karat kind of a volume, then you will see a lower volume growth in 24 karat. So you need to kind of have all the measurements in place and then analyze it.
Got it. And so one last question with regard to diamond-studded jewelry. Since there has been some price disruption in diamond prices, what's the environment looking like? When the consumers are walking in, are they seeking for more discount on diamond-studded jewelries, or what's the awareness level when it comes to price disruption in diamond category?
Honestly speaking, consumers, not all consumers are aware of the the situation that we have seen in the diamond market, and we are utilizing this as an opportunity to educate our customers and inform them that the natural diamond prices, and if you really look at it, it is the smaller, bigger size diamonds that have got impacted. So 30 cents, 50 cents, 1 carat, these are the kind of sizes that have got impacted with the disruption. The smaller size diamond, which is like say 1 cent, 2 cent kind of diamond, there the price impact has not been much. So so with the Valentine's Day coming in, with the wedding season coming in, rather this becomes an opportunity to sell more solitaire and mini solitaire rings and studs and pendants to the consumer. So this is how I think consumers are positive, and that is why we are seeing a good growth in diamond jewelry. So this would be my kind of guidance to you.
Got it. Thank you, sir.
Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Hello.
Yes. Hi,
Am I audible?
Yes.
Yeah, you are audible.
I'm speaking from Harit's line. Yeah, so I have a couple of questions. First of all, you mentioned about men's jewelry growth. So can you please throw more light on it? And I wanted to understand if it is some sort of sensation.
Excuse me, ma'am, can you hear me? Hello? Ma'am, there is a follow-up from your line. The line is not clear.
Just a second.
Can you use your handset, please?
Hello?
Yes, ma'am.
Yeah. So is it better now?
No, ma'am, there is still a follow-up.
Just a second.
Can you please rejoin the queue, ma'am, in that case?
Yeah, okay.
Thank you.
Hello?
Ma'am, I would request you to kindly rejoin the queue because there is a follow-up from your line. We are not understanding what you're speaking.
Okay, I'll just rejoin.
Was she asking on men's jewelry, right? The demand for men's jewelry.
Right.
So yes, what I can guide you all is that during Dhanteras and during this season especially, we have seen that not just the ladies that are coming to the store along with their husbands or family and buying for themselves, but I think there is a subtle change happening in terms of the mindset of men, and maybe 15 years before, 20 years before, only in certain cultures buying gold chains and adorning yourself as a man was there, but not in all cultures. But with the sports becoming more popular, with the movies showing men wearing a lot of jewelry, men have become more bolder and more fashionable, and there has been a substantial increase in demand of almost 15 to 20% in terms of the men's jewelry, chains and bracelets during this time, which is a kind of a trend that we need to analyze more and move forward. Yes.
Okay, that really answers my question. That's very helpful. Thank you, Shubhankar.
Thanks.
Thank you. Ma'am, do you have any further questions as there are no follow-ups on your line now? Thank you. We'll move on to the next question, which is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Hi, thanks for the opportunity. Sir, you have indicated 15 to 16 more stores in the second half. Just wanted to check how many of them will be company-owned and how many of them will be franchisee-owned, and whether this addition will entirely be through internal accrual.
Yeah, hi Devanshu. So as we have said, we have added 9 stores in H1 and subsequently 8 more stores have been added, 9 plus 8, 17. So this includes 4 franchisee stores, right? Hara, Bhagalpur, Dumka and Shantipur as of today. So the outlook for the future, as we have said, is around 8 to 10 more stores, 17 plus 10, 17. So around 5 to 6 owned stores and 3 to 4 franchisee stores are likely to be done by March 24. So as we have said, we are going as part of our going big strategy. Our focus for franchisee is East and particularly Bihar. So the majority of the stores are likely to come in Bihar, so that we have got a sizable and a strong presence in the emerging industrial area, the mining belt, the industrial belt of Bihar. So that is going to be our focus till March 24.
Yes, sir. Hi. Thanks for this. Also, you indicated that West and South are seeing relatively much stronger growth. So does our outlook on expansion in these regions also improve, or we will still restrict majority of expansion to North and East?
No, we will continue to have our focus on expanding in North and East. See, South and West, we are all aware that the market potential is huge, but we would want our stores to perform better and better and more and build further goodwill and traction. We will be opening selectively in South, like we're adding 1 store in Bangalore, or you're adding 1 more store in Pune. But the greater focus is continue to penetrate deeper into Eastern India and strategically open stores in Northern India. So that strategy does not change at all. Was it? Hello?
Yeah.
So, for example, just to add to the point, like we will be adding 8 stores in the coming season, out of which only 2 to 3 will be in South and West, and 5 will be in East and North. So we will not want to lose the leadership position in Eastern part of the country and strategic focus in North. Yeah.
Does that answer your question, Devanshu?
I think he's...
Yes.
Yeah.
I just wanted to specifically ask you about your traction in the Delhi NCR region. What kind of investments in terms of team, etc., that you have done in that region, and if you could throw some light on that.
Yeah. So Devanshu, as we said, the Delhi NCR, as we call it now, north, around 10 stores. We total have now 20 stores, 10 in Delhi NCR and 10 in UP. We are seeing a good improvement in the average sales per store, and majority. So let's say the north, the total growth we have achieved is 26%, and out of that 25% is the like-to-like growth. That's first point. The set ratio has also increased to 19%. So no major change between Q1 and Q2. The ATV, which on a pan-India basis blended, including the franchisee store, will be around 66%, and even in the east it is 66,000. In north it is 74,000. So north continues to be major focus area for us in our growth journey. The sales per square feet in north is also improving.
Thank you, Mr. Banka. Thanks for the detailed responses. That's it from my end.
Thank you. The next question is from the line of Nikunj Kala from Sundaram AMC. Please go ahead.
Yeah. Yeah. Am I audible?
Yes, sir.
Yeah. Good morning, everyone. Good morning, everyone. Thanks for the opportunity. I have just one question, sir. What would be our hedge ratio in this quarter or in the H1 of the FY24?
The hedge ratio we have consistently maintained above 80%, and that is reflected in our the various margins which we maintain as a strategy. And as you are aware, a higher hedge ratio in case of rising prices will the negative impact. So while there will be gain in case of inventory and realization, that will be negated by higher hedge ratio, but still we are keeping it above 80%.
Okay, so it's similar to the last year number, right? Not much of a change.
Last year number, yeah. In fact, it was the average. If you ask me, average is around 84 to 85% for the entire H1.
Okay. In FY23, we were at
sometimes it's at 92% also.
Yeah. So we remember in FY23 for the full year we were at 90%, right?
Yeah, correct.
Yeah, so it has come down to 80% now.
So 80% was only on June end, right?
Yeah.
September end. But average I said is 84%.
Okay,
and
sure.
As you said, we just want to clarify once again. The hedge which we are saying is a mix of the gold metal loan. So keeping the gold metal loan unfixed is one part of the hedging, and balance we do hedging at NCS, NSE by sell future, sell call, buy put.
Sure, sir. And with the incremental inventory we would be building in, considering our expansion plan, that incremental inventory would be containing the same ratio, right, sir?
Yeah. So we do hedging for the entire inventory level. So inventory which was 2,400 kg as it stands around 2,600 kg. So we do the hedging on the entire inventory level.
Sure. Okay. Thank you. Thanks a lot, sir, and all the best. Yeah.
Thank you. The next question is from the line of Mohit Madhiwala from Envision Capital. Please go ahead.
Hello, good morning. Thanks for taking my question. So just two kind of broad questions. Number one is from the top line growth that we have seen, could you please shed some light on how much of this growth has come from new customers versus existing customers? Or maybe even a rough figure of new customer contribution would be helpful. And secondly, can you also please shed some light on the movement in average transaction value that you have seen from maybe H1 of FY23 to H1 of this year? That's it from my side. Thank you.
So the average transaction value overall for H1 this year has been 66,431. So say approximately 66,000 rupees compared to the average transaction value of the previous year, which has been in the range of 54,000 to 55,000 rupees. So this has been the increase in the average transaction. In terms of the new customers that have got added in
64. Your question was how much of the sale comes from the repeat customer, right? Existing customer. So we like to add two factors. The repeat customer sale, the loyalty customers, the existing customer, we've been talking about 20 lakh customer base. The repeat customer sale is around 64%, which was around 60% in September.
36% is new customer.
36 is new customer. So this clearly shows that our loyal customers, the brand image of the company for 8 years, further, as the company has got listed, we are getting a lot of traction in the market, which was not our customer base. So consistently, our loyalty customer base is increasing and repeat customer base is increasing, which means that the marketing spend which we are doing, that marketing spend is for retaining the existing customers and bringing new customers. The new customer is 36%. Now, if you look the same number from a different prism of a like-to-like growth, so the growth which we have talked about, the retail growth is around 23%. From the existing store, it is 19%, which clearly means that the existing stores with existing customers continue to grow, and this number continues to be high. This number in own store in West Bengal is 22, East is 20, North is 25. So there continues to be a good growth story, trajectory, improving brand equity. We are very happy to inform you that while we are consistently second most trusted jewelry brand, in a recent survey by PRA, we have been ranked as second most desired jewelry brand, again at number 2, while the overall rank is around 165 out of 1,000. But among our peers, we are number 2 as the most desired brand. This clearly shows the customer liking our brand.
Okay, super. And just one more question. Could you also please shed some light on the studded share in the north versus what the studded share in the east is currently?
Yeah. So studded share in the north is in our own store is 19%, and in east it is around 11.8%, in south 12.5%, in central 14%. So north continues to be very important for us, and when we talk about the top players, stud ratio of 25, 27%. So let's say we talked about in our quarterly update, in Chandigarh store, I think we have touched almost, in Chandigarh store we have touched 24%. So the potential to touch 24% in the entire north is quite high. Let's say we have got 2 stores in Gurgaon, we have stores in Dwarka, we have Southeast store. So we are aspiring to increase our stud ratio across north to touch 25%.
Okay, got it. And is there any sort of change in the store expansion guidance for the next 3 years? And the split between how many CoCo stores and FOFO stores you will open? Or any guidance you can share on that?
Guidance remains the same that 20 to 25 stores. So let's say 15 to 18 own stores and 8 to 10 franchisee stores. So we've already achieved 17 stores so far in YTD, and we are talking about 10 more stores. So 20 to 25 stores in next 3 years, we clearly see can be achieved, and a number of 250 stores in next 4 to 5 years is clearly achievable. And for that, we've also added that the free cash flow which we have, the free cash flow duly levered at the existing debt equity ratio of 1:1 will help us to achieve the rollout of the existing stores. And in addition, we will be constantly increasing the inventory level at the existing stores also.
Okay, got it. That's it on my side. Thank you so much.
Thank you.
Thank you. We'll take the next question from the line of Aegis Lakhani from Unifi Capital. Please go ahead.
Yeah, hi team. Festive greetings to you and everybody at Senco. So on a very interesting comment on the men's jewelry that you made. It was interesting to know. Sanjay ji, a couple of questions. Could you call out at a blended level what was the studded share you went geography-wise? But could you call out at a blended level what was it?
Blended level for the own store, it is 13.9%, whereas for the franchisee it is 7.8%. So as you said, that the franchisee are in tier 2 and tier 3, they work with a lower inventory level of 8 to 10 crores. So franchisee, we are trying to improve to the 10% level. So own store is 13.9, blended is 11.9. So blended has increased by 100 basis points over last year. But in terms of the volume and value, we said 34% and 60%. That was Q1, and we are seeing a similar range at the H1 level.
Got it. And last quarter, studded was 11%, which is now you said 11.9%. Is that correct?
11.4 it was the last quarter blended ratio, which I had said was 11.2 is what I said. Because there's a substantial growth versus last quarter versus this quarter. 11.1. 11.1 is what I said last quarter, and this quarter we are saying 11.9.
Got it. And sir, could you just speak about were there inventory hedging losses that were reflecting in the gross margin? Is that one of the reasons why the gross margin is relatively lower? And could you just speak a little bit about how we should be thinking about the hedging losses and profits reflecting in the gross margin?
See, as you have said, Ajay, this is a very complex subject. The moment we achieve hedging is desired, expected to mitigate the loss or gain both. There is a concept of fair value hedge and a cash flow hedge. Most of our transactions are fair value hedge because we do not indulge in any negative trend. So, to the extent of the loss on account of inventory, there will be gain on hedging, but that is on the book side. And then there is a concept of realized gain and unrealized gain. So while there will be loss on the inventory immediately, but as far as hedging is concerned, you cannot close and square up your open position. So there will always be unrealized gain or loss which do not flow into financials. So it is only the realized gain which flows into financials. And when that is applied to inventory on a weighted average cost basis, so there will not be one-to-one and exact impact. So having said all these things, in every quarter, there will be 4 to 5 crore rub-off impact of inventory hedging. So you can take it to that extent with the gross margin for H1.
Got it. So, sir, you are saying that it could be 4 to 5 crores higher or lower depending on how your hedge situation has played out, right?
Yes, yes. So what we are saying is that hedging, we are always maintaining about 8% on every single day, and average was around 86% in Q2. So while long-term outlook on the gold continues to be bullish, despite that, we will maintain minimum 80%. And we, as you said earlier, when the price rises and you do hedging, you have to deploy funds towards margin as well. So we will continue to have a very calibrated approach toward this, maintaining hedging at minimum 80% hedging.
Got it, sir. And sir, you mentioned that blended sales per store was 33 and cocoa was 37. Could you give the number for franchisee for the quarter?
Sorry, I mean 33, 37, which one?
So you mentioned that the sale per store at a blended level was about 33 crores, and for your company-owned stores it was 37. Could you call out the number for the franchisees?
Yeah. So franchisee average is around 26 crores. So this is a mix of, so because since we are adding one of the franchisee store in North, that's why it is appearing low. So 37 average. So now this 37 average is also misleading because West Bengal is 55, East is 30, North, and so
on. Okay, sir. And sir, just could you just share that what was, because the sale to the franchisees, the way we are recording the revenues, it is reflecting in the gross margin. So was there a higher sale or contribution from franchisees this quarter versus cocoa?
Yeah, this is a very positive story. So last year the franchisee growth was 2% only, and which we have said very clearly. And this year we are very happy to say, as you said, that the growth has been across all channel and across all geography. The franchisee growth for the current year is the YOY growth is 15%. So a higher share of the franchisee sale obviously dilutes the gross margin.
Oh, got it. So you said franchisee contribution has been 15%, which has been higher than what the last few years have been, correct?
Franchisee growth this year, the contribution will be similar, around 35% in the total revenue. But see, as you said, the Q1 and Q2 or H1 gross margin will be range bound, they will be muted, they will be static, because the real impact of the gross margin will come in Q3 and H2 only.
Right. Yeah, I got that.
I'm sorry, sir, that will be the last question for today. Thank you. Ladies and gentlemen, as we will take that as the last question, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
So I think that thank you everyone. It's been a great conversation. With Dhanteras round the corner, it's the team is fully working. We are tracking the sales. There are footfalls that are coming to the store. Customers have booked in advance, and they would all want to take the delivery on this auspicious date. The Dhanteras timing starts from 12:35 p.m. today and continues till around 1 o'clock in the afternoon tomorrow. So this is for your information, because I hope and I pray that you all buy some amount of gold, silver, diamond for this Dhanteras. It's an auspicious time. And closing, in the remarks, there is one thought that while we can see so much geopolitical uncertainties across the world, which might have a kind of a bullish impact on the gold price and the silver price, but if we look at our country and look at the consumer behavior, I think by the blessing of God, our country is protected. The consumers might get a little impacted with the price, and therefore, as discussed, that the volumes might not grow to the extent, but people have the love for gold and jewelry, and they will continue to buy. The wedding seasons that are around the corner, I believe that people are coming and buying the high ticket size products for the weddings as well. So the sentiments continue to be positive. The full planning and preparation is being done, and we are hopeful that the Q3, which is the whole month, we are already in the middle of Q3. The numbers are looking positive. There are stores in the pipeline, new products and designs and collections are all getting launched, and we're getting a good response. So with full positivity and optimism, we'll continue to perform and grow the business. Thank you very much.
Thank you very much, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Happy Dhanteras to one and all. Thank you.
Thank you. Thank you. Thank you very much. Thank you, everybody.